Friday, this euphoric move up Friday, S&P 500 continuing to push up with a bunch of buying behind it. We looked at the CTA buying into the indexes, and we should jump over. Was Trump right? Is oil going to drop like a rock once this is all over? Will this all be over by the end of April? Big weekend coming up. And obviously, oil today is down back towards $80 a barrel. I would guess if this thing was wrapped up and the strait was opened up, now there's different reports about what's happening. Iran coming out and saying the strait is open. Trump affirming that Iran says the strait is open, and then Iran saying ahead of the negotiations, if the blockade remains, that will be a violation of the ceasefire, and that means that the strait will not be opening. Seems like trying to gain whatever leverage is possible ahead of the negotiations. We'll find out. Big weekend ahead. Right now, we are looking at the S&P 500 ripping to all-time highs. We have a lot of CTAs chasing that bid. Last week, we looked at $86 billion in buying. Remember, they went like max short into the bottom. We saw that quick, led by hedge funds. First time the squeezes is led by hedge funds. And then CTAs last week, adding a bunch of ammunition. Next week, in a flat market, and often when you see these type of moves to the upside, you will see obviously some consolidation take place. Look at this one coming right into an interesting line. Now, what do you think if we were to see like, well, momentum continue to go in this direction of actually a permanent peace deal being had? And if it were to happen this weekend, I mean, it's only the second round of talks. I'm not so sure that it will. As long as the strait does stay open and we continue to see more traffic, that's going to be obviously very beneficial. Sooner than later, and likely ahead of earnings, we're going to see that we see some consolidation take place in the indexes themselves. Healthy, good. Now, I'm watching the weekly, by the way. And if at any point in time I mean, that's a mega candle this week being put in. I think that the double top crowd, triple top crowd is likely, well, I mean, it does look like they're on the wrong side right now. If we were to see, by the end of the day, next week, this thing unravel, if at any time we put in a sharp reversal on the weekly, that's something that will get my attention. But until then, I would be, waiting for this thing to actually consolidate, look for moving averages to come closer into price, and then look for that opportunity to lean in. We have earnings coming up. Thank God. Thank goodness. We get to look at some things like earnings rather than what tweets are coming through or what social. This is in a flat market, $70 billion next week. That's a lot of buying. This is happening in a moment when the majority of buybacks are in a blackout, right? You're not seeing that bid into the markets. The biggest bid there is in the markets at an all-time high, by the way. As far as flows, that means CTAs right now at the right time are carrying the flows. And then as earnings wind down, you're going to see those buybacks coming back into the market. And then you could see the seasonalities here of where we are right now. Some people might talk to or talk about midterm elections years. I think also, I don't have a chart for you, that the 6th year of a presidency is also worthy of consideration. April, so far, tracking what it normally does. Look at the consolidation into May. Again, that's not during a midterm election year. And then what else we have over here? There was one chart over here that I wanted to show to you, and I hope I could just pull it up and find it. And yes, indeed. I thought that was a pretty good chart, a pretty good view. So obviously, market continues to run on headlines, and if at any point in time the situation that seems to be significantly improving was to escalate, get walked back, or anything like that, expect massive volatility, and we'll continue from where we are. One more chart. I think I want to get up there. No, I mean that's a weekly chart. That's an insane weekly candle. I saw what was really interesting. Some people doing research on past, let's say, moves up this sharply, this quickly, and it led to one of two things. It either led to like something that happened at the dot-com bubble burst at the very top of the bubble, or it leads to significant continuation on the upside. Which one we're at obviously remains to be seen. Lots of positive developments taking place. And what's nice about it on the stocks here, crypto lagging behind crypto, we have obviously Bitcoin not taking a full stop loss, tightening up that stop loss, taking a stop loss there at 2.7%. And then that was almost at the low. That hurts because right now we would just be sitting so pretty as Bitcoin is spiking off of today's further news and development. Moving over and looking at Solana is in the trade all alone. B South showed us some research that actually the most favorable moves happen when Solana leads in. Let's see whether or not we get some follow through over here. We're going to look at the charts in 1 second. First, let's look over at what's taking place on CTM stocks. We saw that NVIDIA has entered and has now reached double digits. That's very obviously welcomed. Tesla into a new position, and then a monster entry on strategy here, now up in 2 days over 18%. Strategy carrying the table at this particular moment. And it's such a great reminder. If you looked at the work that Brownie Brown has put together and talking about trading 50% stocks, 50% crypto, and that what that does to the smoothness of the portfolio is so important. You never know what's going to kick off, when it's going to kick off. Here we have, obviously, strategy was very favorable coming into the end of the year, just crushing it on the downside. After crushing it all on the upside, late 2024, and then now here in a nice trade on the upside. To look at the forward testing of the V4 on the stocks templates over here, you can see that an incredible entry on TQQQ. This is just forward tests, 19%. Very, very good. Our TQQQ is currently out of the market, being held back by ST1. And then you look here at Tesla, just waiting here. We got into Tesla. GBTC, along with Bitcoin bull runs, is getting close here to entering the market. Very interesting. FNGD, this is a forward test. All this is forward test, but this was taking on the sell signal a buy on FNGU. Currently here looking at nice profit. What I like about this though, and you can see that honeymoon this morning, NVIDIA is lagging our 10% position, but in the green, and then strategy is matching our V2 performance. What's really interesting to me about all of this is that you're seeing stocks out of the market majority of the year. Now all of a sudden that momentum kicking and how quickly CTM could get in the market. But more importantly, this is probably the hardest and most difficult thing for people to wrap their minds around. This is so important for you to embrace, and that is, guys, it's usually a wave of trades that go on to make up the majority of the profits for the year. And you never know when that wave is going to come in. We did some work that we're looking forward to implementing on seasonalities, especially with the stocks. One thing that I want to point out, as Brian has added some really good research, we'll take a look at in a second, and that it might seem that instead of seasonalities, Bitcoin bull runs being a barometer of when to weight positions differently, more favorably for Bitcoin and crypto. Very valuable data. We have to look at that. And then again, this is another element layered on top of CTM work, talking about now, okay, the models are really dialed in. What can we do to continue to improve that trade management? The weighting of the positions is obviously a really good place to be looking into. I want to just take a look at some discretionary charts over here as we're seeing a potential major break in structural shift. This is bullish. If it were to happen, in hindsight, people will say that was an Adam and Eve bottom, right? If you were here and you were not in CTM, if you were, we were before CTM was born, but if you look at over here, you had an Adam and Eve bottom as well. Is that reversed? Are we looking at an Eve Adam bottom? You can see the sharp move down and then more of the rounding and then taking over. Very similar to what's taking place here today as you move in and you see the rounding, then the sharp down, boom, taking off. And then you can see that we are breaking the trend line over here. Most of the time, those are hold your breath type moments. Most of the time, people are not ready for the reaction out of them. I have to say, and you all know from being around, that more often than not, they have significant consequence. We could look at that from some other angles, and this is a really good one to watch as well. As here you had the earlier breakout, the retest it never broke down though. And then the secondary breakout, if I were to clone that line over there, and now into very important resistance. We got to clear above this. If we do, if for example, and I think it's going to be headline driven, if we see that, we saw last week that the two parties walked away from the deal without a deal, which was the first round of talks and to be expected. And then markets gapped down and that was it. It's just been straight up since. Why? Because they were continuing to negotiate. So I think that whether or not there's a deal to be had this week, as long as coming out of that deal, both sides continue to talk, and now even more so, the strait remains open and we see more and more increased traffic coming through it. At that point in time, I think that's all that is needed. If you were to see an actual peace deal take place, which I don't know, I mean, what's being floated, it's a 3-page letter, and that the majority has already been inked and done. If that's all true, if any of that's true, and if we were to see a deal, that would probably lead to obviously a sharp gap up and some follow through. Bitcoin, if it's able to break above this area from this line over here, structure I have, looks like that we're targeting. I just want to, before I make a comment, just want to just look what's there, right there. You can see that. So there's some space over here, $5,000 move, and then ultimately up towards 86, 87. Be very welcomed over here. I just want to get a look at what's going on over here. I like that other view on the 8-hour a little bit better. You can see this view over here, we're just right into the money, right into the 1-2-1-2 resistance we were looking at yesterday. We are right into the area that needs to be broken. And if it is, this thing is going to break structure in a positive way for the bulls, likely also leading to, over here, the breakout of Bitcoin versus gold. And if that were to happen, that's a major, major shift. You'll find out at the bottom that a lot of people who have not been in the Bitcoin space too long have, well, capitulated at the very wrong time. Find out who's right about that in the long run. Let's just jump back over here and see what else we want to review today. I'm going to save Brian's work for Monday so that I could really, I know the sum of it, and I saw people also giving their valuable feedback on what they think it is, and I agree with it all. But before I present, I want to make sure that I really have the time to spend with it and then be able to cover it with you all on Monday. Very, very good. Very well done. Very valuable. And then also a great reminder here of what we were looking at last week with the weighting around seasonalities for stocks. I think both those things are crucial implementations that will take place here in CTM over the coming. We'll find out. Everything seems to happen right on time. Yeah, I don't have a target. So I think it's for the coming weeks. We're gonna say by the end of the week. Obviously, what we've seen happen is, and I mean, you can watch I was leaning into the Mag 7 over here. They'd come off anywhere from 15 to 30% off. Thought that was a fantastic time. I'm looking at lightening up, taking some off, waiting for some consolidation. Find out what happens here with earnings. You saw the seasonalities for May. It could be a little bit sideways. What does the market have to digest, right? I'm not so I don't have these preconceived ideas about like what I think is going to happen. I'm watching what's happening and react around that. So what I'm looking at is watching, most importantly, what happens with the price of oil. If you remember, going back to November, December, at the worst of the job market, I was like, I think that's the worst, and I think we're going to start seeing improvements. Now we're even seeing 60, 70,000 jobs openings for the software, for tech software positions, dev positions. And I think that we've seen the worst of that. That's a very good sign for now. Ultimately, and obviously, and I can't give you a timeline, but in the foreseeable future, a lot of jobs are going to be absolutely replaced. There's no question about that. We're talking about what's in front of us. You're giving a time frame of a couple of weeks, and I'm just wondering why no one has hit the thumbs up here this morning. Look, over the next couple of weeks, we've just came one of the like the greatest upside moves that the markets have seen in their history for this amount of time, and I think there's some stuff to digest. Whether or not we're going to see a consolidation, probably if everything continues to work out favorably with Iran over the next couple of weeks, leading into earnings, rather than a consolidation, we'll probably see some upward consolidation taking place. If things go bad over the weekend, we're gonna scream and scorch back down. There's no question about that. Do I think that we're gonna consolidate sideways this move? Probably not. Probably, probably like this, something like this to occur. And I think it comes down to what happens with earnings. Assuming if the straits opened and the PA that we saw today was pretty significant to the downside on oil off 15% right now, 14%. If there's a deal, and I think we all see oil going back below 70, and it's not probably stopping there, right? And ultimately back into an area of very comfort. There could even be more supply on the market with Iran allowed to ship its oil. And if that's happening, then you're going to see oil going down to a really favorable place. And if that's happening, this was obviously a one-off inflation spike that's going to be viewed as benign to the market. And this would ultimately be the best case scenario playing out. But then it comes to the reality of what's happening. It comes back down to the hard data. Are we actually seeing the job market, maintain itself? Yes, over the next month, CPI is going to be given a wave. Like those were viewed as one-off shocks. Likely, the Fed will begin talking about, oh, actually, we could think about cuts later in the year. And then market's going to have to reprice towards that. And then obviously we have to watch what takes place with retail spendings. We have to watch what is going on with earnings, and we have to watch what's happening here with the hyperscalers. Are they going to continue to spend, pull back? You could look back and you could say, which is why a lot of macro analysts have completely been blindsided the last few years, is that, yeah, in a regime where monetary policy was tight, where QT was running, the markets were able to continue and avoid a recession, and likely because of actually OpenAI and the release of ChatGPT back in 2023, and then the massive domino effect that's had in what we've seen, the massive spending as the AI build out has begun in force. It's a rare reminder because it was just a rare reminder, and I appreciate all the love. If you're not in shock by seeing a move like this, well, you should be. It is extraordinarily rare. I think we should probably come back and look at a similar move, right? And come back to 2000 and look at this. Look at this puppy. So the market off the bottom in 2 weeks, because we just went through 2 weeks, is all up 30%. Now, granted, that's not fair. Market originally off 40%. 40% up 30%. I mean, wow. Here you saw the market off in 12%. So it's a lot different in so much as that sorry. in so much as that, I don't know why I'm getting stuck there. A lot different in so much as that in 2000, the event that a lot of people are comparing this to, you saw market major correction 40% and then a 30% bounce, not to all-time high. In this case, you have a 12% correction and then over a three-week period, a 17% move up. It's not the same. It's different. And, you know, that's how quickly the markets can change. We have seen, and it seems like you can remember, obviously, March, April of last year. Like, you remember this. This is when a lot of people got attracted to CTM. Everyone's bearish, close your eyes. And then I was like, if we break above this, you will see a waterfall. This is also the area, by the way, where Michael Burry was like, sell. And Jim Cramer was like, the NASDAQ is going to melt up. Now, he was expecting and hoping for a pullback that never materialized, actually went straight up, but either which way. Yeah. Um, so I just have one thought, because the only thought I want to share about this whole thing is that I'm trying to think how to frame this and put this, and you know how the situation has been handled over the last 2 weeks, I think shows a very strategic, mature, high level thinking on the part of the United States. And obviously, the situation was getting out of control and could have spiraled out of control. And without having to, it was really, ever since the pilot was rescued, from that moment on, the rest of the situation has been handled pretty brilliantly. And I think that also needs to be mentioned, because, why they went in there for under whose guidance or any all that, there's lots of questions that, and I was vocal about all of them. So at this point, I think always be fair and balanced. Also have to say how it's been handled over the last 2 weeks is pretty good. That's all I want to say. Yeah, I mean, well, here we go. Yeah, this is a mega short season, and I just want to talk about the flows though. And what's happening here with the flows though is we have over the next 5 trading days, today included, there's a mega amount of CTA buying taking place in a flat market. And the market's not flat; it's going up even more. And then, yes, that then subsides. Is that when we see the consolidation take place ahead of earnings? And it's going to be dependent on what happens also with earnings. It really depends on what happens. Netflix just put out spectacular earnings, by the way. And the stock had dropped like a rock off of it. But that was because of someone leaving the board. I have to check in on this. Look at that mega gap down. So right into nice area of support. So is that a sign though, with their solid and strong earnings, that earnings are indeed going to be so? You say, well, the reason the stock is down has nothing to do with earnings and or guidance. It has to do with a critical board member leaving. So that's the first sign we have. And I'm so glad that we could start looking at things that matter, like data coming up. Hopefully this thing winds down. Wednesday, the 29th, 30th is when we begin to see the earnings of the hyperscalers of big tech. And that is what matters. Tesla earnings coming out Wednesday. Big deal. Intel, I mean, I don't know if it's a big deal, but definitely in play at this particular moment of time. And then so this is before the end of the month. And then after is when we'll see those buybacks coming back into the market to support it. So lots of positive things taking place. Yeah. So yeah, let's talk about this. This is good insight and saying, well, it doesn't really make so much sense. We were seeing the market prior to the war tipping over. A lot of people were getting concerned over here in this area. And in all fairness, so in that moment, in that area, that's when you were seeing the significant worry about the job market. And it made a lot of sense. You were seeing the significant increase in cap spending now being monetized in order to pay for it instead of coming out of cash reserves. There were a lot of uncertainty and questions. It all seemed pretty healthy, um, that it was taking place. So you're saying why now? And you know, well, I mean, in January, again, I talked to you about yesterday. I was talking about the Yardi research, and the thing is it came right into the pocket. If I don't know, yeah. Look, there's nothing easy about it. How about we say that? Look, anyone who was bearish, it makes sense. It thinks now for me it was different. I was looking at, I believe we're going to muddle along, and then people are going to realize that we're actually going to, the job market's not so bad. We're going to hit reacceleration. Now, a major curveball was thrown into this. Over the last 2 months, we've seen a major oil spike, energy prices really causing damage and spiking. Seems that likely, if resolved, is not enough to slow down the American economy. And you could see why right now a lot of people might be interested in actually investing in US. You have the whole AI, major AI frontier model race. Obviously, it's US and China led, and people don't really want to invest in China. They don't know if they'll get their money back out, right? So you see a lot of money coming into the US. Listen, I get worried after this build out comes to an end, which is why I say watch the capex spending. I get worried when, if we are able to reaccelerate, when all of a sudden that has is actually lasting inflation impact, and maybe that's offset by AI. Could very well be. I don't know. I get very worried if we start seeing a lot of people losing their jobs and actually a really strong deterioration in the job market. That's going to have lots of domino effects throughout the economy. Obviously, you need people buying products. You need people paying their mortgages. And if we were to see warning signs, I get worried when the tax cuts and all the stimulus effects front run are coming to an end. And if you're seeing growth going to slow down, and if you're going to see all of a sudden people losing their job, that's when I don't think we're there yet. And I don't know if this was enough to change that view, or if oil is actually going to be something that the market was able to absorb pretty quickly. And it depends on what happens over these next few weeks. And that's how we make up our mind. And that's how we form an idea. But I didn't, bear market 2026, I recession 2026, right? I was obviously laughing at that and very counter to that. And now of course you see oil above 120. That was not involved in the picture at that particular moment. But if that's happening, well, that's something that's going to definitely change things. So I agree. Lots of love, D Power. You most certainly did. Most certainly did. At the peak of the fear. Definitely did. Well, you know what? I also think what affected Tesla earnings was, or the last couple of quarters, were the energy credits that were being taken off the table. Um, and I think because a lot of people prior to that happening were obviously making purchases, whether or not it was electric vehicles and or solar. And I think that what matters more here is if Elon says that you're going to see optimists going into production and ready to come to market. That's the thing that could ignite Tesla, and I think much more important than what's taking place with the cars. Obviously, investors are going to be interested in seeing what type of scaling is going to take place with the robo-taxis. I think those things matter more than car sales at this moment as a transition's taking place. And that's what I'm interested in hearing about is what, or are we going to see that stuff pulled back? And I also expect that, yeah, there you go. Thank you for saying that, Duggan Nation. I also expect, obviously, a massive increase in the revenue and the subscription of full self-driving. And that's something like, you know, that's really positive. Really, really, really positive. Remember, Apple's a subscription business. All right, fam. Thanks for hitting the like up today. Thanks for being here. Euphoric feeling. And you know that often those things come to an end, but it's dependent on what happens here with whether or not the two sides continue to talk and work towards a peace deal. When that peace deal will take place, watch Polymarket, probably for the best odds and how that is continuing. Listen, as long as we see both sides continue to talk and negotiate and the strait remain opening, there's a lot of bullish momentum continuing into next week. That could change. Stay on the right side. Stay disciplined. Have a beautiful weekend, everyone. God bless you.